Welcome back to Mortgage Insider Update for this week. We've got a pre-market update for you today as the bond market has just opened. Stock market not quite open yet. First reactions to the CPI report, Consumer Price Index, coming in 5% for the month of March. 5.6% on the headline. 5% is the core rate of inflation, the one the Fed mainly focuses on. Currently, the federal funds rate is 4.75 to 5%. That's the range. And now we're actually seeing the core CPI coming in right at that upper end of the federal funds range. So will approaching or breaching the inflation rate of the federal funds rate above the rate of inflation happen in the next couple months? That's what we're going to find out. Let's check out the charts. Initial reactions to the Consumer Price Index this morning. It is 6:37 a.m. on the West Coast, 9:37 a.m. on the East Coast. About 37 minutes of trading has taken place. The 10-year Treasury on the bounce here is coming off of a high over the last few days in anticipation of the CPI report. Moderating inflation, still a high rate of inflation at 5%, but moderating each month for the last 7 months. So as inflation continues to come down ever so slowly, we are getting to a point where we're going to invert the amount of the federal funds rate to the rate of the core CPI. Now there's multiple forms of inflation. PPI, Producer Price Index, will come out this Friday. So more reports to come, but the initial reaction is a positive one on the 10-year. Universal mortgage-backed security is improving today. This is bouncing off a low. The price that investors pay on these mortgage-backed securities will work in reverse of the actual interest rate that you saw on the 10-year. So mortgage-backed security pricing increasing. That is a positive for forward on current locks for clients purchasing or refinancing homes. So green is good on the chart here. We are going to run into resistance at the 200-day moving average, but did bounce off the resistance down here at the 25-day, 100-day, and even the 50-day average. So the charts are really unmoved. I mean, if we want to look back in time here, since March 15th, we've seen highs and lows, pretty volatile trading, a big jump up and then an immediate bounce back. And the red would be the negative, interest rates were actually increasing there. And then we've seen, improvement in interest rates just this last week up until April 4th, and then the pullback. So really a flat market overall. It does keep interest rates in that mid-6 range. That seems to be the new norm. That's a lot better than 7% or 6.75, which we saw back at the beginning of March. So let's find the positive and make it a great week. We'll see you next time.